So Paul Tudor Jones, noted hedge fund manager, very well-respected guy by the mainstream. He says he's buying Bitcoin because he's worried about inflation. Now, I know the Bitcoin people are going to be very excited about this because, something that folks quite, a few years ago were saying about Bitcoin that they were so happy and waiting for is, we need just to wait for these institutional investors to get into the market. Bitcoin is just, it's such a, it's not that easy to buy. And so all these big time guys, your hedge funds and your big investment banks, they're sitting on the sidelines because there's no real easy way for them to go in and buy Bitcoin like they would any other commodity. And so one of the big things that I remember back, there was a lot of talk about, Bitcoin futures when that comes. And of course, the Winklevi were trying to devise their Bitcoin ETF, which would have made it very easy for people to buy into the Bitcoin market. And so a lot of the focus on the idea that Bitcoin is going to go up is on how mainstream is it, because you're not going to get much mainstream adoption without mainstream people actually buying into it. And so there's a hope now that, now that Paul Tudor Jones, a very well-respected guy, is backing Bitcoin, then other people are going to start jumping into the market, which is not necessarily a terrible prediction. But leaving all that aside, what I really want to get into is the merit of what he's talking about, because the reason why he's buying Bitcoin is not just because people are going to buy Bitcoin, and so I'm buying Bitcoin. He's not doing it like people are hoping that these other investors will, just buying into it because Paul Tudor Jones is buying into it. He has a very specific reason, and that's because he's worried that we're going to enter a new decade that's going to look a lot like the 1970s. Paul Tudor Jones is predicting that we have a decade of, or more, but it's certainly a very prolonged period of anemic economic growth, very low growth, and high inflation. And so the era that would be analogous to this would be, the 1970s, after the end of Bretton Woods and the Vietnam War and all that disaster. There was a lot of inflation in America, and there was very low economic growth. Of course, we also had the oil crisis, which was a supply side shock that did a lot of damage to the economy too. I guess you could say that maybe this whole Wu flu pandemic is our modern analog to that oil shock back in the 70s. Or you could certainly argue that it's much worse, but it's it might play a similar role here. And what's a big lesson that people should have taken from the 1970s is that you can't alleviate the pain of a supply side shock with a demand side solution, i.e. creating more claims on the productive capacity of the country, printing money when your economy loses the ability to produce as much things as it could before because of some supply side shock. Printing money is not going to do nothing but produce more inflation, because you're not going to stimulate growth in production if people can't produce more. Supply has hit a wall, and by creating more artificial demand, you're just driving up the price. And so as a hedge against that, Paul Tudor Jones is picking Bitcoin. Now, am I going to get into the fight over whether, Bitcoin or gold or silver is what you should be buying if you're worried about this? No, not really. My only thing I'll say on that is that personally, if I want my boogaloo money, I'm not going to be betting on, magical internet money. If I'm so worried that there's going to be a total economic collapse to the extent that the U.S. dollar ceases to function, then I'm going to want something that probably doesn't require an internet connection to use. I would want something that is physical and something that I can keep under my mattress. And so for me personally, even though I'm not doing any of this because I'm not that worried about stuff. Of course, I'm just finishing up college, so I don't really have any assets to protect anyway. I don't, have a massive bank account that I could, transfer into silver coins or something like that if I wanted to. So I'm not, keep in mind that I'm not acting on this advice, but that's just what I would say in this case. Rather than debating, which boogaloo money is the best, I think a much more interesting question is whether or not you really think that boogaloo money will ever be useful, that you'll ever need it. And to me, the fact that someone who is as mainstream as Paul Tudor Jones is articulating the idea and is flirting with the idea that such a thing may be necessary as these alternative forms of money is in and of itself very significant. It shows just how serious the situation is. Now, I will clarify that old PTJ is not saying that he buys into the ideology of Bitcoin and all that. He's not joined the club, so to speak. He doesn't think that Bitcoin is going to replace the dollar or anything like that. He's just worried about 1970s style high inflation. He's not worried about 1920s Weimar Germany style inflation. But to me, that's kind of a distinction without a difference, because if we get to the point to where we have 1970s style inflation, I think that it's a very short jump to go from that to 1920s Weimar style inflation. And the reason for that is that the only cure once you have 1970s style inflation is the cure that was administered by Paul Volcker, and that is jacking up interest rates to some ridiculously high number like 20%, and wringing inflation out of the economy by force. That was all that halted the inflation back then. But our Fed today would absolutely never do that. There's no man with the attitude of Paul Volcker left alive. No one has those kinds of stones. No one could weather the storm with all that going on. No one could make the case that that's necessary to the American people, because all that the Fed tries to do is alleviate the pain felt by really people who own assets. Folks who have stocks and bonds and things like that. That's who the Fed is concerned about. And the Fed has learned at this point that if they tighten just a little bit the purse strings, that they are going to cause a lot of pain for all these folks who own risk assets. And so not only is it not realistic that if we get into some 1970s style of inflation, that the Fed would do what's necessary to stop that from getting worse, raising interest rates drastically. They wouldn't raise interest rates at all. In fact, they would just keep on easing. And if there's trouble caused by the inflation, well, then the Fed's just going to print more. I do not think that the Fed is ever going to be able to go back. They can only go further and further down the road at this point of printing more and more money. So if their actions begin to have adverse results, well, then the Fed is just going to double down, and they're going to keep injecting more and more of this monetary heroin. So the only way that this whole system holds together is that we don't have any kind of inflation problem at all. Because normally, some mild inflation of 5 to 10% would be easily controlled by just raising interest rates. But if the Fed did that, asset prices would collapse, and our entire bubble economy, what's left of it, even after entering this Great Depression that we're going into, would be totally eviscerated. Now, of course, that would allow for the economy to be reborn anew and to come back much stronger than ever. But the Fed cannot tolerate that pain. And so ultimately, I think that what Paul Tudor Jones is saying is not very far off from the kinds of things that a crazy person out of the mainstream who should not be listened to, such as Peter Schiff, has been saying. Because if Paul Tudor Jones is right, so is Peter Schiff. He just might be a couple of years down the line. But make no mistake, in order for, what Peter Schiff to be right about, now, of course, those of you not familiar with Peter Schiff, he's been predicting that there's going to be a sovereign debt crisis in the U.S. because the dollar is going to be devalued by the Fed to the point that where, people are no longer willing to accept or to buy U.S. Treasury debt, except at significantly higher interest rates, and jacking up the interest rates would bankrupt the U.S. federal government, leading to a crisis. In order for that prediction to be true, we need very high inflation. Higher inflation, well, actually not even really higher inflation than Paul Tudor Jones is talking about, to be honest. If we had 1970s style inflation, the inflation premium would push up interest rates on the Treasury notes much higher than the federal government would be able to service. But the Federal Reserve would not let them go bankrupt. The Federal Reserve will buy, whatever debt the government issues at any price. And so that will only exacerbate the inflation problem. Once, as old Schiff says, once the inflation genie is out of the bottle, there's no putting it back in. And, we could, if we had someone like Paul Volcker at the Fed, but our country is way past that era. That's not going to happen. Jay Powell is never going to be Paul Volcker. And so it's not so much that the inflation genie is impossible to put back in the bottle. It's that nobody has the balls to grab that genie by the tail and send him back from whence he came. And I think that's about all I have to say on that matter for now. If you gain anything of value out of this video, I'd appreciate you clicking that like button and sharing this video. And if you haven't already, please do subscribe because I do upload every day and I'd hate to have you miss one. So I'll see you folks back here tomorrow.